Hey, good afternoon. This is day two for us with my follow-up series of live events, webinars, I guess, with regards to connecting people with different down payment assistance programs and grants. So today we're going to go over how to get approved for a down payment assistance program or grants. We're going to cover the five key parts to getting a mortgage approval. That pretty much covers the whole mortgage industry. It's actually a lot easier, in my personal opinion, to qualify for a lot of these programs and some of the other standard mortgage products that are out there. We'll also go through some success stories, answer some frequently asked questions, and then give you some information with regard to some of my future webinars that we are putting out there. So, but we'll go into that right after the introduction here. Interesting, running into a lot of buffering here today. Well, we're going to bail on that for today. So unfortunately, a little bit of buffering there. So anyways, work in progress. This is our second day doing this. So just try to improve a little bit every single day. But anyways, let's jump into today's topic, how to get approved for a down payment assistance program. There are five things that basically go along for any type of mortgage. So we want to cover a mortgage package is typically going to cover your credit, your income, your assets, the collateral, which is the actual house itself, and the title. Obviously they want to make sure that there's clear title of whatever property you're acquiring. So there's some practices there. So typically the collateral and the title, we don't have as much input in, so I'm not going to focus a lot on that, but we are going to touch on a couple of things that you need to be aware of. But for the first thing, credit. Credit seems to be one of the obviously bigger topics that I run into. I actually do a webinar on Thursdays, and that is anywhere from how to get your credit score up 60 points in 60 days to, I think this Thursday we're doing how to establish credit. So credit is a big topic now, especially with a lot of people getting some bumps and bruises with COVID. So, but what are the credit components that go into getting a mortgage? So a lot of the down payment assistance programs out there require credit scores to be in the mid 600s. There are a few down payment assistance programs out there or grants that will actually go down to 600. Okay. So I always tell people if your credit score is in the high 500s, we should probably be talking. It's usually not too challenging for me to help coach you up and get credit scores up 20 points in 30 days. In fact, like I said, I do a webinar on Thursdays, how to get your credit score up 60 points in 60 days. So if you need help on that front, stay tuned to the end and I'll go over when my next webinar there is. But for the most part, we need to have your credit scores above a 600 to qualify for any of these products. They do not like any recent late payments. Okay, so if you're if we have an isolated 30-day late within the last 6 months, that's something that we can sometimes explain away. But if there are any habitual 30-day lates within the last 6 months, that's going to turn us off to a lot of programs. But we still need to talk to make sure and get you on the right path. Okay, so they're looking for some good recent credit history. Okay. Other thing they're looking for is most of these programs want to see at least a couple of trade lines. Okay, with the exception to the one through the state of, there's one through the state of Michigan where as long as your score is a 640, the amount of trade lines does not matter as much. But for the most part, you need to have at least a couple of trade lines. What a trade line is a line of credit. It could be a credit card, could be your auto loan, could be something that's paid off within the past few years. So we need to show some activity to support the credit score that's out there, and that it's not a false positive, that you just don't have a high score because the algorithm may have a little snafu in it. Okay. Also, there are different ways to build credit if you have no credit score. If you have no credit score, there actually are some options. There is a down payment assistance program that can work for you if you have no credit score, or for that part, no credit history showing up on your credit report. Okay. There are ways to take different, what they call alternative trade lines, and factor those into the equation. So, for example, I had a gentleman a couple of months ago, had no credit score, but he had several things that he has been paying for a year or two. He was actually a big gamer. So he had a couple of, I think it was Sony PlayStation bills that were being paid on time. He had his auto insurance. He had a cell phone bill. Those are all things that don't typically show up on your credit report, but we were able to show that he made those payments. They were actually automatically deducted out of his checking account. So we just provided bank statements for 12 months, and we were able to create a credit profile for him and build his credit. Okay. So he didn't have a credit score. He was still able to qualify for one of the programs that we work with. So these programs are quite flexible, okay, with credit, but we still typically need to have a credit score above 600 to get anything done, at least in the Detroit metropolitan area. There is one program that's outside of the area that will actually go down to a 580 with zero down too. So keep that in mind too. So details on those, probably best to attend my webinar, top 10 ways to buy with no money down, or the top 10 programs that I help connect people with. I do those Wednesday evening at 7 o'clock. Okay. The next topic that the lenders look for are income. Okay. So a lot of these programs do have, they don't necessarily have minimum, but we do have minimum income requirements with regards to debt to income ratios, and I'll go over those in just a second. But for the most part, a lot of these programs have maximum income. Okay. So for example, the webinar that I do on Wednesday, the top 10 ways to buy with no money down, or top 10 programs that are out there, I would say 7 of those 10, maybe 6, do have some income restrictions. In other words, your income has to be below typically about 100,000 a year is where a lot of those programs are right now. So there are, but there are exceptions to that as well too. Watch if you have a higher income or higher earnings in your house. On the minimum side, the lenders all have what they call debt to income ratios. Now, what are debt to income ratios? They are basically, they don't want to see more than a certain percentage of your income going to your house payment, okay, and your overall debts. Now, when they say overall debts, they're looking at what is on your credit report, okay? So typically credit cards, auto loans, personal loans, student loans, things like that. Your overall debts, things that don't show up in your credit report, things similar to car insurance doesn't typically show up, or cell phone bills, or maybe monthly subscription fees that are deducted out of your checking account, like Netflix, gym memberships, like I said earlier, PlayStation bills, things like that. Those are not included in the debt. So let's say, for example, you have an income of, let's say, 1,000 a year. So if I take that's $5,000 a month times 0.45, that tells me $2,250 a month would be the maximum that can go to your house payment and your overall bills. So if you have $5,000 a month in income, and that debt to income ratio says 45%, that's $2,250 a month. That's a fair amount. So let's just say we subtract 500 for an automobile. That takes us down to 1,750. Maybe you've got another 200 for credit cards, student loans, things like that. That still leaves $1,550 a month to go to a house payment. Right now, that's buying $175,000 to $200,000 house on a lot of the programs that I help connect people with. So, and those can be done with just a few $1,000s out of pocket. Okay. So that's what we mean by debt to income ratios. Now, with regards to your income, they do want to see a 2-year history. It doesn't have to be on the same, if it is, it's a big bonus. But if it is not the same job, let's just say you have 2 employers, that's fine. Okay. If you were off, let's just say 6 months for COVID, okay, you've got a year and a half in your current job, 6 months on COVID, and before that you had another job, they're just going to go back to that other job and use that. They just need to show 2 years of income. That 2 years of job history can be over a 3-year period. Okay, they'll probably need a little letter of explanation, but just the same, there are ways to structure those deals and get it together. They will look for recent pay stubs. Okay, so your recent pay stubs have to show or be reflective of what your income is. So right now we're in April. Okay, so if you're saying you make $3,000 a month and we are basically 3.5 months into the year, January, February, March, and half of April, that's 3.5. So if you make $3,000, that's 3,000 times 3.5. Your income should be about $10,000 or so, okay, on your year-to-date side. Okay, so recent pay stubs are a big factor. We have to look at those. It has to make sense. Okay, the other thing they look for is they want to see predictable and sustainable income. Okay, so with COVID, it's not uncommon for people to have, 2 or 3 jobs over the past couple of years. That part, they're somewhat understanding. Okay. But they typically want to see that you're in the same industry and that your income is somewhat predictable. If God forbid something happens, you're somewhat employable. Okay. So that kind of dives into the income side as far as what they look for approval. Now, assets. Assets are the amount of money that you need to get things done. Now, most of the programs I work with require at least one purchase price into the transaction. All right. So, for example, if you're looking at a $150,000 house, which I often bring up, $150,000 is typically equating to about a $1,200 a month house payment. I focus on 1,200 because that's actually less than what the average 2-bedroom apartments are in the Detroit area right now. So any of you renters out there, you understand the pain of trying to find anything under $1,300 right now. So with that being said, you need to have at least 1% of the purchase price. So on a $150,000 house, you'll need to have at least $1,500 into the transaction. So the lenders do document every single penny. Okay. I did do a webinar yesterday, how to structure a transaction, going over the pennies. So they will want to know where that minimum contribution is coming from. So let's say, for example, you're going to put a $100, you're doing a $150,000 purchase, and you're able to structure this so that's the only amount you need out of pocket. Okay, don't get me wrong, that's a little, it's easier said than done, but it does happen. Okay, we can thread that needle and pencil your transaction to get it as close to that as possible. But you'll have about $1,000 for a deposit, maybe $500 to the lender to cover your appraisal. Means you would need nothing at closing. Okay, but keep in mind, they're going to document every single penny. Okay, so you have to show where that money is coming from. It has to be in your account. It has to be what they call seasoned funds, which means that money needs to be sitting around, or we need to show that it's maybe a payroll deposit from your employer, something along that lines. Or you can get a gift. Okay, you can actually have a family member give you $1,500. We have to document it. Okay, we have to show that the person that's giving you the money has the ability to give it, that they have that $1,500, and they'll sign a letter saying it is a bona fide gift, does not have to be repaid, and they're going to want to see deposit slips showing that money move around. Okay, again, they document every little thing, but when it comes to these types of loans, that's to be expected. Actually, for any type of loan nowadays, they're actually doing that with minimal amount of money down. Okay, so that's the asset portion. Okay, so as you can see, when it comes to 5 steps, whoops, see here, the keys in my mind, and now here's that. Okay, the keys here for most people are credit, income, and assets. Okay, now I have no problem helping people with my webinars getting credit up. So we're going to help you with that. The income standpoint, unfortunately, that's the one thing I can't do. I can't take care of the income side of it. The assets, we can certainly work with that. Most people can come up with at least 1%. The rest of the money with the down payment assistance programs and grants, that's my job. I'll connect you with all the money that's out there and structure it so it'll work for your pocketbook. Okay? Now, those are the 3 things that I tell most buyers that you need to be concerned with. With regards to collateral, we need to make you aware of it. Okay. Collateral is basically when you buy a house, they're going to do an appraisal. Okay. The banker, the lender, they're going to send an appraiser out there. They want to make sure that that house is worth what. Okay. They will not pay more than the appraised value. I take that back. They will occasion, but not come out of your pocket. So let's go back to that $150,000 house. If you're buying a house for $150,000 and that appraisal comes in at $145,000, they're not going to do the deal unless that $5,000 is coming out of your pocket. Okay. Now, the other side of it is if it does appraise for a little bit higher, there may be some ways to maybe work the numbers a little bit, not running into that nearly as much as we used to, but it does happen. Okay. So when the bank or mortgage lender sends the appraiser out to appraise the property, they're looking at what the market value is. Okay. They also want to make sure that the house is in good habitable condition and there aren't many repairs that need to be done. Okay. Sometimes if there are repairs, the appraiser is going to mention it. And if he does, it could be something that needs to be corrected before closing. Okay. So the reason I focus on this particular segment as far as collateral is it's very important for you to know what the value or have a good idea what the value is in the neighborhood where you're purchasing a home or you're making an offer before you do it. There's no sense going down the mortgage approval process road if the home isn't going to appraise. Okay. And we do run into that nowadays. We're running into a lot of sellers that have an inflated worth with regards to what their house is. So, so that being the case, if a home doesn't, it becomes a big headache. So that's something that you want to know going in and you want to have your eyes wide open. Now, if a home doesn't appraise, it is possible to go back and renegotiate. Okay, that's something that's done all the time. So, but just the same, it's important that you know going in. Okay, so it's important that you get a handle on comparable sales in the neighborhood for the home you're making an offer. So that's all I'll go over. Okay, last piece is going to be title. Now, in a mortgage file, they do want to make sure that the house has what they call marketable title. Okay, that the seller is able to convey it with nothing more than getting a title insurance policy. Okay, but it is wise to check public records in advance. Okay, you don't want to get knee deep into a transaction, negotiate a deal, pay for an appraisal, put down a deposit, go through all of this work only to find out that the seller may have some hiccups on there. Okay, whether those hiccups are maybe a gap or a break in the chain of title, maybe there's a second mortgage on it or a lien that nobody is really talking about. Maybe the taxes aren't paid, or maybe the taxes are non-homestead and higher than they should be when you're, not that that wouldn't correct itself after a period of time, but just the same, you want to know going in. Also, there are a lot of times I will see taxes look like they are way artificially high in the multi-list, and they're really not that high. There's just an assessment that's on the house that needs to be taken care of at the time of closing. So it's wise to take a peek at those public records just to know what's out there. Okay. And the lenders want to know. Okay. They want to know if there's any assessments out there that the title company's taking care of it, paying those off, that the taxes are all paid and brought up to date, and all the liens are being satisfied at the time of closing. So the title company has no issue uh, conveying or giving out a first lien letter as well as title policy. So anyway, so it's important to know those things, but those are key to approval in my opinion. Okay. So with regards to some of the frequently asked questions, processing time, how long does it take to process these types of deals? Typically about 30 days. Okay. Eligible properties, a lot of the eligible properties are basically the homes need to be in good habitable condition. Okay. That's what I would consider an eligible property. Okay. Income restrictions. We did say that there are some income restrictions on the upside and the lower side. You have to have some minimum income requirements in order to meet those debt to income ratios. Okay. Credit and debt requirements. We did touch on that. For example, you need to have at least a 45 debt to income ratio or lower. They will do credit scores 600 and above. There are options for some credit scores all the way down to 580. Okay. Next thing, first-time home buyer. Do you need to be a first-time home buyer to qualify for a lot of these programs that I help connect people with? The answer is no. Okay. Some of these programs, I would say maybe a third of the top 10 that I go over on Wednesdays, those typically only 3 out of that 10 need to be first-time home buyers. Okay. So, and a first-time buyer is typically just defined as someone that hasn't owned a home in the past 3 years. Okay. And then the last question is, how do I contact a lender for these down payment assistance programs? I always tell people, please reach out to me. I'm happy to connect you, put myself in your shoes and connect you with the lenders that I think will do the best job for you for your particular situation so you can have good predictive results. Okay. So with that being said, just a couple out of the success. Actually, had one that closed in East Point. This one just closed a couple of weeks ago. It's actually, we have Rich and Nicole. It's actually Rohan and Nicole. They purchased a home in East Point for $168,000. They were able to tap into a new program that was through Flagstar. This program just launched 2 weeks ago that gave them $10,540. $5,000 covered their down payment for 3% down. I think it was 5,000, whatever that worked out to. And then they were able to get a grant. So they got a gift for 5,000 and then a grant for 5,000, a total of 10,000. So they were able to purchase this home with just a $2,000 deposit and then $1,300 at closing. So $3,300 and they were able to buy this house. Okay. Great program. Here's another one in Southfield. This particular one, Crystal purchased. She purchased it with using a grant program that gave her $7,500. The purchase price was $156,000. It was a 3-bedroom brick ranch in Southfield. She only needed a $1,000 earnest money deposit and $2,600 at closing. Okay, and let me give you one where here's one in Wayne. This was a true 1% out of pocket. Jennifer just needed $6,000 through Mishta. Purchase price was $105,000 for this 2-bedroom brick ranch in Wayne. She just needed a deposit of $500, pay for the appraisal of $500. She only needed $55 at closing. Okay, so this was a true 1% out of pocket transaction. Okay. All right. So those are the, that's enough for the success stories today. So that is it. Where do we go from here? I'm going to go over some of the other things. I have a ability to book a call with me. Let me give you my cell phone number. Is the best way to get a hold of me. That number is 248-527283. You can also book a call with me at nodownpaymentrequired.org/book. That's access to my calendar. Happy to go over, schedule a time, learn your situation, and let you know what program I feel would be the best fit. Now, Every Wednesday, I do a webinar, my top programs, top ways to purchase with no money down. Right now, we have 10 programs that we touch on. There are actually 10 programs available in Southeastern Michigan where you can purchase with no money down. They're either down payment assistance programs or grants. They cover everything. Okay. I also do a weekly webinar. Oh, the webinar for tomorrow is actually at 7 o'clock. So if you go to the website, nodownpaymentrequired.org, and register there, you'll get invites and links to my webinar for tomorrow at 7. The other one is a weekly webinar on Thursdays. On Thursdays, I tend to go over credit, okay? And at both of those webinars, you can ask me anything you want once we're done with everything. Happy to go over your personal situation. Happy to do that through a scheduled call or even right online, okay? And one thing I ask, if you could please do me a favor, go out to YouTube. If you're on there now or seeing this, or if you're on Facebook, if you could please give me a thumbs up, I certainly appreciate that. Or subscribe. Subscribe to my YouTube channel or to my Facebook page, and we are going to be uploading this content every day. So maybe not every day, I take that back, but it's going to be, we're going to be doing these webinars for about 30 minutes. Monday, Tuesday, we're going to go off about 12 o'clock, about 12:30. And then Wednesday is going to be from 7 to 8 p.m. And then Saturday, we're going to do more of a market update. Okay. And that market update will just go over what we're seeing in the marketplace and more of an Ask Me Anything. So we'll try to limit that to about an hour as well. So here is the schedule for this week. Yesterday, Monday at 12, we did how to structure a no money down transaction. Today, the one that you're seeing right now, how to get approved for a down payment assistance program and grant. Wednesday, tomorrow evening, that's my typical one I've been doing for several months now. That's my top 10 no money down programs that are available. And on that one, we're going to cover the details, what the credit scores are for each one, what the income levels are for each one, what areas they cover, don't cover, things like that. And then Thursday, we're actually going to do a how to establish credit. So if you have no credit or need to build credit, Thursday is going to be a good evening for that. I find that those webinars are a little bit thin. So if you need help on other fronts, I tend to open up the mics where you can just ask me anything on the fly. Okay. And then Saturday, 10 a.m., we're going to do a market update just to give you my feel and take on where the market is, where it's heading. And you can ask me anything with regards to real estate. So when it comes to real estate, I hate to give people my resume, but I have been in real estate for about 35 years right now. So I've had interest in mortgage companies, title companies. So there's very few things that have not hit my radar. So happy to share that. And if I don't know the answer, I'll be sure and let you know. And we can tap some of the resources we can do to get those answers for you. Okay. The replay for today and for all of my webinars, I do post those out on YouTube. Okay. And on my Facebook business page. I am in the process of changing my business page from Michigan Home Search and my website from Michigan Home Search over to Own the Roof. Okay. I'm finding that Own the Roof tends to help more because I'm finding the programs and products that I tend to focus on and that resonate with people tend to really work with renters. So I tend to focus a lot of my energy on educating renters on how to purchase with no money down and get out of the rental. Right, but that's almost what I feel like we're in right now. The rental market, in my opinion, is just out of control, but I'll elaborate more on that on tomorrow's webinar. So anyways, just want to keep this to 30 minutes. We're now approaching 12:30. So thank you all very much for attending. Appreciate your time. Thank you very much and have a good day. Oh, if you have any questions, never hesitate to reach out to me. My telephone number, 248-252-7283. Oops, is right here. 248-252-7283 is my cell phone number, and you can always book a call with me at nodownpaymentrequired.org/book. Thanks again, and hope you enjoy the rest of your day. Goodbye.